Thank you for joining us at XM.com. This is the weekly outlook. Investors have a lot to anticipate this week as upcoming data might shed some light on whether the U.S. and the Eurozone have dodged the recession, as well as the first meeting of the Bank of Japan with its new governor. I'm Cristina Marujos. With me today is lead investment analyst Rafi Boyetian. Rafi, let's start with the Bank of Japan. It meets on Friday. And new Governor Kazuo Ueda has been rather dovish in his comments, so markets don't expect any change in policy at this meeting. However, they will rather focus on any hints of future possible tweaks. But how could the yen perform in such a case?
Well, Christine, I'm not sure how accurate it is to say that he's been dovish. I think it's more accurate to say that there hasn't really been much change in his stance. He perhaps, if you compare him to his predecessor Haruki Karuda, maybe he's actually being a little bit more hawkish in the sense that he's a little bit more upbeat about the prospect of the Bank of Japan seeing sustained wage growth, and then that would really enable policymakers to then proceed with further removal of stimulus because, of course, we haven't had any rate hikes in Japan as we have in other countries, and we still have yield curve control firmly in place. And of course, before hiking rates, Bank of Japan would first have to phase out yield curve control, and maybe, just maybe, we might get some hints on that in his inaugural post-meeting press conference on next Friday. So, of course, policy is expected to remain unchanged, but we're also going to get a set of updated economic forecasts. So we should see there whether or not the inflation forecast for the Bank of Japan, if they still expect the inflation to drop to 2%, or if there's some sort of growing concerns that inflation will take longer to reach the 2% target, or whether they might see a further some inflationary pressures coming back. At the moment, headline inflation is dropping, so that gives Bank of Japan plenty of time to take its time. But clearly, any hints, any clues as to the possibility of further tweaks to the yield curve control, that could potentially, boost the Japanese yen next Friday.
I see. Let's cross into Europe now. Q1 GDP data is coming up, and there might be some light at the end of the tunnel, as the euro area might have avoided a recession. But could the report alter any expectations around the European Central Bank's next move at the May meeting?
Well, it certainly can, because at the moment, we've heard from a number of ECB policymakers, some of them arguing the case for another 50 basis point rate hike, some of them being a lot more cautious. Markets are only pricing in about 30% probability that the ECB will hike by 50 basis points at its May meeting. So clearly there's plenty of scope there for those bets to go even higher. So should we get stronger than expected growth in the first quarter, then that would definitely bolster the case for the hawks within the ECB Governing Council. Now, if we don't get much direction from the Flash GDP data, investors will probably be looking at the Flash CPI estimates for the month of April, coming out initially from Germany and France next Friday. Now, of course, the Euro-wide numbers will be out a few days after that. But nevertheless, it might give some clues as to, it's going to be a good indication as to what to expect in the next Flash CPI numbers for the Euro area, because the headline inflation is coming down quite fast, but core inflation remains persistently high. So that's been really the main concern for ECB policymakers. So clearly, I think there's plenty of room for those the 50 basis point rate hike expectations potentially to change in the run up to the May meeting. And should that be the case, should we see growing hawkish bets on that, then that would clearly help the euro climb even higher. At the moment, the euro has kind of been stuck beneath the 1.10 level, struggling to break above that key level. So I think a lot is at stake should we see more hawkish bets gather pace.
And Rafi, finally, turning to the United States, it's going to be a data-packed week. We'll also be getting GDP data out of the United States this week, but maybe the spotlight will fall on the all-important PCE print. How could the data, though, shape expectations around the Fed's May meeting, and how could the dollar perform?
Well, there is right, Christina. So the PC inflation numbers will, I guess, be the most important one here. We do have the Flash, the advanced GDP readings coming out as well. But we know that the US economy did fairly well in the first quarter. The expectations are GDP to have grown at an annualized pace of 2%. So clearly no sign of a recession in the US just yet. I mean, some are predicting that maybe towards later this year or the beginning of next year, we might see possibility of a recession. And that's why investors continue to price in a rate cut towards the end of this year. Now, of course, the Fed hasn't really given any indication that they're willing to cut rates this year. So we have this continued divergence between market expectations and the Fed's guidance. So the data will be important. Of course, aside from the core PCE price index, which is, by the way, expected to moderate ever so slightly to 4.5% in March. So that's, significantly down from where it was a few months ago, but still some distance off the 2% target. We're also going to get personal consumption and spending data as well, which should give us a good idea of how well the spending powers of American consumers is holding up. So should we see some strength there, then that would obviously boost expectations that the Fed will continue to raise rates after May. So markets are fairly confident at the moment that the Fed will pause after May, after hiking by 25 basis points in May. But should we see growing signs both from the data and from Fed policymakers that they will continue to raise potentially through the summer, that would clearly, be significant in terms of potentially hitting Wall Street. As for the US dollar, on the other hand, it's a little bit difficult because unless markets are convinced by the Fed's actions, then the dollar will continue to struggle, and it will probably come down to Fed Chair Powell to having to set the market straight on that.
Rafi, thanks so much. This was the Weekly Outlook here at xm.com.